Hey, all, Sean Maloney, Digital Business Masters, another DBM strategy call. We do these every single Monday for good reason, because we want to set ourselves up for the coming week. One thing about this space, that is the digital asset space, is it's incredibly fast moving. That's what makes it so brilliant and exciting, but it also can test you. So the least we can do as 15 plus year veterans in this industry is to put people in a place whereby they have a weekly update on the big picture. Because if you don't get the big picture, this industry will eat you alive. You'll just get sucked down with all the naysayers, all the victims, all the people that just haven't got what it takes to start something, but most of all, keep it going. All right. So we don't make any bones about that at DBM. We are here as professionals to make sure that we stay the course. Because in case you haven't noticed, the only way you're successful in anything in life, let alone business, is to stick with it. And when you've got the most valuable information in the world behind you, and it literally is that, I know it sounds overstated, but it's really not. I mean, once you understand the fundamentals of what we need to do to what's called fix the money, then you see everything else has a very good chance of being corrected as well. And that's really all this is about. It's not really about the money. It's actually about fixing how you maintain purchasing power, the fairness of you putting energy into something every day and having the ability for that to be a store of value into the future. What's wrong with that? And since full fiat came along back in 1971, that has been impossible for the average person to do. The only people that are wealthy, whatever definition you want to give to that, are those who own assets. Period. No discussion. So the job is to figure out how you can do that. And what we love about the digital space is it gives incredible low barrier to entry for everybody to do that. But in that same breath comes the fact that you get a lot of people who just don't know what they're doing. Hence education, and hence part two is all about application, applying yourself to the greatest information in the world. Simple as that. We're not here to give you any advice. You're a grown adult. What you decide to do is your business. But we are very, very passionate about always seeking financial education, not always seeking financial advice. In case you haven't noticed, especially if you're a bit older, any advice you've been given all the way through your career and your financial building process that is part of life, you go and look back on how that's worked out in terms of the advice. Then compare that to taking control of your own life. And to do that, you need education. Now, I brought this slide back into the realm again because it just needs a quick look at to make sure. Right? Everyone's a genius when asset prices are going up. Everyone thinks they're a genius. When asset prices go sideways, or you get these long periods of relatively boring business, or then you get a pullback, you've got to go back to basics. You've got to understand that the whole reason you're doing what you're doing is because it's never been more important to be as close as you can be to the center of the money supply. Now, you can't do this as an individual in terms of printing your own currency, but you can do the skill of acquiring assets that get positively influenced as the powers that be at the center of this money supply continue to print currency. That's your indirect ownership of being in the center of the money supply. However, if you're going to play there, if you're going to work in that world, as opposed to being on the periphery right out here where you never tend to see it, think of your siblings, your friends, your neighbors. They never go anywhere near close to what you know. And they live almost in ignorant bliss out here and just put up with death by 1,000 cuts. Yeah? Now, if you want to go back out there, you're more than welcome. But if you're going to work in the middle of this thing, or at least be aware of the benefit that comes of you being in the middle of this, you better understand that you are putting yourself into a world that can get very, very uncomfortable. But not as uncomfortable as living for 50 odd years, God willing, in your adult life, being subject to death by 1,000 cuts. So it's a trade-off, right? All I know, in my humble experience over the past multiple decades in business, but this past decade or so, just over a decade now, in digital assets, is decisions we took to understand this as a result of 2008, frankly, the great financial crash, so-called. The decisions we took then have put us in a totally different plane today in 2025 than we would have been if we hadn't taken action at that point. And it's not been easy. And arguably, it's still not easy. But it's a damn sight better to be aware of it. Hence, I'm able to talk every week with volition and confidence and awareness to have yourself in this mind frame. And that's really what the Academy is about. That's the main thing the Academy is about. So I just wanted to stress that, because as we'll go into in a minute in the macroeconomic and the geopolitical stuff, there's a new reality being formed that's actually a lot better than where we were a decade ago when it comes to digital assets. It's much improved, but it doesn't make it any less nervy, right? It doesn't make it any less challenging and anxiety-ridden, okay? Well, as I say, just keep reminding yourself that the real anxiety lives in people who only think that they can be 100% reliant on bosses, banks, and governments. Being anxious about things you are determined to be in control of is a much better anxiety, right? You're not going to get away from anxiety. It's just the nature of it. But the point is, we do our best to help people see the difference. Now, that's made a whole lot easier when you keep another eye on the big picture here, which very briefly is all about making sure that you understand how to live your life at the bottom of this infographic. Simply taking energy, effort, time, skill to obviously bring in an income in whatever way you want to do that. We call it fiat mining. And then you convert some of that debasing, devaluing fiat currency and you allocate it to assets that appreciate and are what's called accretive. And if you're really good, you'll learn how to convert a proportion of that equity into cash flow. Then you're motoring, then you're really going. And that's the panacea. That's where you want to be in. Equity plus yield, and then you fund liabilities. Take it out of your head about buying liabilities. You were taught to do that at school. You were taught to do that by your parents. You were taught to do that by the government. You were taught to do that by the banks. You were taught to do that by bosses. Don't buy liabilities. Fund them. You can still own them, but the whole idea is it's a very profound difference in mentality when it comes to you actioning your life. Yeah? Let the assets do the work. Fund through your balance sheet. Don't just click over every single month, every single year, every single decade into just buying stuff with the same fiat currency that's devaluing. That's the fundamental issue. Yeah? You cannot possibly get ahead at less than $100,000, maybe $150,000 a year in terms of earnings. And these days, it's just impossible. It's probably not been possible, I'd say, for the past 3 decades, since the 90s. But you can go and figure that out for yourself. So the model we operate, very briefly, 3 pillars. You've got the main pillar, okay, which is to understand sound money and have an entity in your existence that is accretive, that must go up as they print more and more fiat currency. It's sad to say, but that is the facts of life in 2025 and most of the 21st century as we go forward, frankly. I don't like saying it because I know how many people, billions of people on the planet, get adversely affected when currency is printed. This is where you've got to understand the difference between money and currency. If you don't understand that yet, go back to the Academy, go to where to start and have a look at the resources. But when they print currency, the vast majority get affected. The people who don't get affected, the people who actually benefit, are those of us that own assets. And those of us that own the purest assets of all, which is manifest as gold and has been for decades and decades and decades, but more recently also Bitcoin. Bitcoin is digital gold because it has all the properties of of sound money, but it's also incredibly efficient at being moved around, right? That's why you put up with some of the challenges with what people get frightened of, which is volatility. But volatility is good. We want volatility. And the sooner you get that into your psychology, the better off you'll be. So the least thing you need to do in this model is dollar cost average Bitcoin. If you wish, you can take some of the equity, like I said before, and you can find as many ways as you possibly can to create yield. You can't run a successful business just off a balance sheet. Again, people have got this mentality of savings and pensions and annuities and insurance, and they're taught that by financial advisors who take all the fees. They take all the yield in the fees. Don't you worry about that. They're making cash flow every single time you put a deposit into your pension plan. They're living their life. So don't listen to them. They're taking your money to create their income for their business. They then give you this hope that at a point in time, most people call it retirement age, you'll be able then to draw down off that balance sheet and have enough purchasing power to live the rest of your days. Do you really think that's the case once you've studied the last 30, 40 years of debasement in currency? Do you really think that whatever you're currently at with regards to your pension pot, your savings accounts, your annuities, your insurance policies, add them all together, track back to the 6 to 8% debasement of fiat currency that we've seen forever, and then going forward calculate that onto whatever projection they're telling you may have in fiat currency terms, and tell me what purchasing power that's going to give you in 2045. That's the real skill. So your job is to understand that that is a fallacy. It's there. It can be there. You can still do it. It's there. But you've got to take control. You've got to take control by understanding how to play their game on your terms. And that's the hard bit. That's when you're coming away from death by 1,000 cuts and starting to work in your own confidence zone. You've completely shifted into another realm. It's the most powerful information in the world. And the sooner more people understand it and do something about it, the better the world will be. Now, if you really want to get moving after that, we'll talk more about this in part 2 of today's call. You need to be a Systems Plus income subscriber to get into part 2. But I will go through it for those of you here live, of course. The whole idea is that you take the same philosophy of what you've got with equity and accretion with yield, and you combine it into one ecosystem. Right? This is what's called decentralized finance. This is DeFi on the altcoin side. Is it easy? Absolutely not. It's brand new. The concepts are absolutely right. It's all about stock to flow. It's all about understanding how to own something and then have that benefited by multiple satellite utilities that spin around the core asset. You then get the equity from the core asset, especially if it's got low fixed supply, and you're able to contribute to all the activities that lead lots of people all over the world to create the same rhythm in how they're using that entity to create value. It's brilliant, absolutely brilliant. Very few middlemen. It's a fantastic way to be, but it takes a huge amount of effort and resilience. Of course, most people haven't got that. Now, to help all that along, we have distilled over this past year or so all the combined experience of all the coaches in the DBM community, hundreds of years of knowledge and awareness and experience, and we've distilled it down using AI to make the cost of entry as low as we possibly can. We've put it into what's called the Wealth Builder series over 12 months. We're just about to 1st of December as it happens today, and we've just opened up module 4, which is a really, really good module because it talks to you about the tools of the trade. Think of it like a factory, and you've got all your different divisions laid up, all your different production cells. You need all those tools in place, and then you overlay onto those production cells different pieces of machinery that create the cash flows, and your job is to manage that day in, day out, to make sure that you're converting value. You put all that back, especially in the early days, back onto your balance sheet in the form of Bitcoin predominantly, and then you take that equity drive as time passes to go and enhance your factory more and more and more and more and more. To do that, you need tools of the trade, right? And one of the tools of the trade that you may not be aware of, that you may not be doing yet. It's doing something like micro mining. It's mini mining, if you will, or running a node, simply contributing to the network. That's a very powerful thing. So we explain that in Module 4, at least to the point to get you started. So you're more than welcome to join us. Get over to the Academy. You'll see the link below, and you can catch up very quickly to Module 4, no problem at all. And we'll see you every week for the live updates from the coaches. Now then, let's go into the macro and the geopolitics. But before we go there, again, just to give everybody a sense of perspective, we understand everyone's a genius when the price is going up. But what that does, it puts you in a position whereby you may be making decisions that are premature, overzealous, excitable. You feel like you've got a bit of cash in your pocket. You're going to start doing things, okay? And that's okay. But wouldn't it be better to learn how to do all those things and prepare the ground and get your ducks in a row when times are tough or tougher? Yeah? Times are always tough. So it's just degrees of tough. So times are tougher when you're getting drawbacks and pullbacks and things aren't quite going the way you want them. That is the time when you put in the effort to learn what you're going to do when times are good. Because when times are good and easy, you want to be making the accurate decisions that you learned when times were tough. That's what times are tough. That's why it comes like that. That's why we have times are tough. Because it gives you lessons. It makes you more resilient. It gives you fortitude. It tests who you are. It puts you in a form of, have I got the metal or not? That's why so many people, just like the gym, when times get tough, they walk away. They just don't want to know. That's why most people are employed. Don't be that person. Be the person who pushes through. As you can see on this chart, we speak from experience, having pushed through time and time and time and time again, resilience when it comes to running just Bitcoin alone, all the way back from 2012, 2013, 2014, etc. Yeah, we're a genius in 2017. Imagine how you felt when you were buying Bitcoin in 2014 and all of a sudden 2017 happened. Imagine how you felt. Genius. And then imagine how you felt when 2020 came along. Imagine how you felt then. But then imagine how you felt in 2021. Bloody genius. And then imagine how you felt in 2022. And it kicks on again. Big winter again. And then last year, oh, we're a genius. Oh, we're a real genius. And then a little blip, little tiny little drop here from 126 to 86, relatively speaking. Yeah, little tiny little drop here. And everybody starts panicking. Give me a favor. The tourists will come and the tourists will go. Forget them. Work on the fundamentals. If you were around when it was all about idealists and entrepreneurs and all the cowboys and everybody was driving in on concepts and positioning on a dream, if you were around then and you survived, fair play. Because now we're into corporate, we're into professional, we're into regulation, we're into all this stuff. Now, I'm not saying it's any bloody easier. It isn't. There's as much cowboys over here than there is over here. But the whole thing is it's built on increasing premise, solid foundations. And you've got to keep an eye on that. We're not we're not destined to fortune. We're not like bias chasing, we're not here to think everyone's sweetness and light and we've cracked the holy grail of how to be rich. Nothing to do with that. It's to do with the fundamentals of sound money. Those of you who have accrued gold over the past few decades, those who have acquired Bitcoin over the past decade, you know what I'm talking about. It's all about sound money. Just get that, understand that, and then just let it go. Go touch grass. It's fine. How do we keep that type of confidence and volition and fortitude alive in our psychology as we're working week over week over week? Well, it's not rocket science. We just go to the data. We go to the information. We look at as close as we can, the horse's mouth. We avoid mass media. We avoid all the YouTubers that are just looking for clickbait on every single reason why you might click, whether it's good, bad, or indifferent. We avoid all the haters. We simply find the best people we can, which is a privilege of this industry. Think about it. If you were running a normal business, you'd look for the best mentors you could find. You'd look for the best banks you could find. You'd look for the best lawyers you could find. You'd look for the best health and safety consultants you could find. You'd find the best people who could come and help you run your factory in a way that is productive and measurable and ongoingly organic. That's what you do. That's what you do, in case you haven't ever run a factory. In this world, it's no different, other than you have an absolute smorgasbord of places you can go to find information. And the real skill, actually, and all of us have to go through this, and we're not saying we're right, wrong, or indifferent. We've just been at it a long time. So we've built a lot of connections. We've built a lot of relationships. We've separated the wheat from the chaff. We understand good, bad, and indifferent. So therefore, we've built up the ability to go and tap directly into people that have been around a long time, that know what they're doing, and most of all, can prove their own success. That's where this comes from. My job, I feel, at this stage, is to distill that out as much as I can, as succinctly as I can, into a couple of pages on a PowerPoint that give you the start of a working week to go, I'm in. This is now clarity. I can see what I need to do next, and this is what I'm going to do. And that is most profound, excuse me, when it comes to actually putting the boots on the ground with what are called projects, the actual machines in your factory divisions. We talk about that in part 2, okay? But in this part, it's all about macro, high level, in other words. So let's have a look. Now, as can be the case when you're preparing for sessions like this, you can get yourself put to bed at midnight, or whatever time you go to bed, and all of a sudden it's, what the bloody hell's going on with Bitcoin? But bear in mind that Bitcoin never sleeps. If the Asian markets are waking up just as you're going to bed, then that can have a consequence. And we've done some very quick research this morning. Just want to know what's happened. We were going big guns again. It was going great, over last week, back up to 91, 92,000, building its way back up again after the last drawdown. And then lo and behold, bang, 86, whatever it is today. Why? Well, we don't know fully yet, but quick research doesn't take you long to figure out that there was a spillover correlation in traditional Asian markets overnight, right? Triggered by the bond markets in Asia, mainly Japan, all right? There's still some longs unwinding. Why people do it, I do not know, but they just will. They just will. It's not people anymore. It's a lot of institutions as well, don't forget. They will just go into these long positions and they just get greedy. They need to bring in controls around the percentage leverage that you can put into these exchanges in crypto generally, just like you've got controls in the normal stock markets. That must come next. And I think a lot of that's going to come from the Clarity Act coming from the US over the coming weeks. So hopefully this will settle down and we can push on. All right. And more FUD, of course. Yeah, more FUD. It's the Tories yet again. People who have come in buying high at 126, thinking the geniuses. It takes a little bit of a pullback and they run for the hills. This has gone on forever. It's just part of the job. Just accept it. It's what it is. All we do is hold through DCA and take advantage of the dips. We push through and we focus on fundamentals, which is what I'm trying to do right now. Pension funds. This is where the big picture comes in, which just keeps you sane. Pension funds are evaluating Bitcoin as a store of value amid rising inflation and geopolitical tensions. Yeah, no shit, right? The pension companies are like the real granddads. They're not going to, literally, actually, they're not going to do anything that is remotely sensitive, right? But the very fact they're evaluating now is a big deal, okay? Can Bitcoin truly meet institutional standards for long-term preservation? They'll take potentially years to figure that out. Doesn't really matter. They're just one part of the liquidity pool. They're a big part of the liquidity pool, it's got to be said. But they'll just keep putting their money into building skyscrapers in a city near you and going out there investing in whatever, right? And they just don't see it. They just don't see it. One day they may see it, but because they don't see it is why we do what we do, right? Independently, as individuals, as grown adults, we circumvent this perception that the pension companies know what they're doing, the financial advisors know what they're doing. They just don't. So we'll see. Fact is, they're evaluating. That's a good thing. Closest to the ground, Uber CEO Dara, I don't want to say his second name because I'll destroy it, confirmed plans to adapt Bitcoin into their payments protocols. Fantastic. That's just more, let's say, Joe Sixpack, visibility on what it is to use what are called crypto payments. DBM will never veer away from the fact that you do not use your Bitcoin directly to purchase and buy liabilities. Understand that. Don't buy, fund. Big difference. Institutional retail buyers are piling back into spot and Bitcoin ETFs, etc. BlackRock's wallets added over nearly 2,000 Bitcoin, 197 million, and nearly $10 million of ETH in the past couple of hours. That was on Wednesday. Okay, so we did see some inflows into the ETFs for the first time since the 8th of October last week. So we know that the ETFs are coming back in again. Trouble with the ETFs, they tend to act like retailers, and they'll dump when the price goes down. They buy when the price goes up. Tells you all you need to know about financial advisors, by the way. So just expect that, right? As soon as the price starts to turn again and we hit the bottom and start escalating back up properly, which we think we're already at, then you'll see the ETFs pile back in again, which is why it's a joke. Kathy Wood, we'll talk about people that we follow, and I suggest you should follow. Kathy Wood is certainly one of those people. Liquidity returns in December. She gives reasons why she thinks that. Expect liquidity squeeze that crushed risk assets to be cleared. Okay, so this is what happened in October, and certainly into November we saw the liquidity squeeze on risk assets such as Bitcoin. She's expecting that to be cleared out now. Crypto is the most sensitive to liquidity shocks, that's for sure. Just saw that overnight yesterday. Those shocks are temporary, always are. They always are. And always remember, they need to print currency. They need to print currency. They are printing currency. In fact, we expect the announcement tomorrow that the Fed will confirm it's back into quantitative easing. If you don't know what quantitative easing is at this stage, then you need to work harder. Relief could arrive by early mid-December. So we're on these precipices again. We don't live and die by it. But all we know is we've survived tough times. We go into good times. We make things happen in good times. We go back to bad times. We survive bad times. We do it all over again. That's just the way it is. If you're the type of person that can put up with that, fair play. When liquidity returns, Bitcoin historically moves first. Now, we've seen it in gold and silver. I don't know how many of you guys are gold and silver bugs, but part of the fabric of what we've created over the years at DBM is certainly on gold and silver. And it's quite interesting right now because we're seeing those all-time highs, all-time high from gold just in the last 24 hours, and I think all-time high from silver on Friday, if I'm not mistaken. So those are interesting because you have to take a judgment on that and say, well, I do own gold and silver, and that's now gone through an uptick. When's that going to start pulling back, and when's Bitcoin going to start going back up? So you can sort of flip between assets. Yeah, that's actually how you do it. Now, it takes a bit of time to build that up and everything else, but notwithstanding, it's worth mentioning. Bitcoin's Sharpe ratio has collapsed to zero territory, the last level seen before major reversals. Okay, so the Sharpe ratio is something that you can have a look at for yourselves. It hit it last week again, first time. And normally, when we see that in 2019, 2020, 2022, it's before major reversals. Yeah, so it's bouncing along that Sharpe ratio. It has been now for a couple of weeks. Bang, woof, back up again. Be ready for it. Like I said earlier, these are the times when you take the time to learn and think about what you're going to do, especially as we go into liquidity events like we'll talk about in part 2. The Fed is officially ending quantitative tightening, like I said, this week, so keep an eye on that. I do believe that's tomorrow that they're going to be talking about it, but they're slippery as hell, right? They're slippery as hell. So let's keep an eye on what they do. Either way, it's all to the good because they have to print currency. And even states in the US, individual states in the US have spotted this. It's very interesting to observe. Texas, for example, we know that Texas has been a front runner in Bitcoin now for some time. It's a lot of the mining is done down in Texas. They took over from China as the biggest place in the world. The US did. Most of that's done in Texas. So the mining's been done for a while. But they now become the first state, the first independent state in the US to purchase Bitcoin ETFs with a 10 million investment on the 20th of November. At an approximately $87,000 basis. Okay, so they've set themselves up nicely there. That's very much what we try and duplicate, obviously. Not so much in ETFs. We do prefer self-sovereignty. But the whole idea is if you're watching companies like Strategy, then maybe you've got that as part of your portfolio already, and that wouldn't be a bad thing, but just be careful. Just be careful. It's everything we went through back in 2017, 19, 20 with DeFi is now happening with TradFi. Shenanigans, brinkmanship, moving, all these things being tested, etc. It did us great in DeFi. As long as you stick through with it, you did well, and it'll do you great also in TradFi. But just be just be cautious. Let's learn what we learned in DeFi. We went through a lot in DeFi. We still are going through a lot in DeFi. But the fact we're here puts us on a stronger footing than otherwise. So the same will happen with TradFi. So let's keep an eye on it. It's a great problem to have. I love it. Toulouse became the first city in France to accept Bitcoin for their subway payments. Okay, great stuff. The French, they were funny a lot, the French. But at the end of the day, they are good making manoeuvres independently. If one thing France, or the French people actually, are good at, is standing on their own feet and not being pushed around. I'll say that lightly at the moment, but we'll see where we go. The fact is that they are now starting to see that they have a level of empowerment that is driven by digital assets. United Arab Emirates brings DeFi under control in its own central bank systems. We know UAE is a spearhead. It's a trendsetter in this space, so it's fascinating to watch UAE. Just enacted the first federal decree that places DeFi platforms, DEXs, Web3 projects, blockchain bridges, stablecoins, all the things that we do at DBM, right? Under UAE central bank direct oversight. You can have your own opinions on whether that's good, bad, or indifferent. Doesn't really matter. It's out of our pay grade. Nothing we can do about it. Just look at that as a signal as to where other countries are going to follow. Yeah. And it's okay. It's okay. You can't have everything. I mean, back in the day, we were Bitcoin maxis. We were pure rebels of this is decentralized, OG, nobody else can touch it. Yeah, it's a bit naive. A little bit naive. There's going to have to be a middle ground, and it's manifesting itself with oversight. Despite the brinkmanship that was discussed last week with JP Morgan, and again, as I said last week, be careful. You'll get drawn one way in the conspiracy side. It's a murky place to be. A lot of people will knock you off balance over there. They've always got a problem. They'll use anything to justify their position. You get a lot of that with the Ripple Army. Yeah. The Ripple Army will use anything that happens in the moment to justify their position. That's part of the way they operate, right? So be careful with that. But at the same time, on the other side of that coin is the fact that these big institutional companies, obviously, are not where they are without playing dirty. Everybody knows that, right? The truth is somewhere in the middle. So the job is just to understand, and we didn't understand this week because we didn't know, that, okay, so it looks like there's been some brinkmanship going on with regards to JP Morgan, giving Jack Mallers a bloody nose, giving Michael Saylor a bloody nose, causing problems with price, issuing out all sorts of rumours and edicts and everything else. And then no less than a week later, JP Morgan applies to launch its own Bitcoin-backed bond. So in other words, they're copying Michael Saylor's model. Now, of course they were always doing that. We should have known, right? Either way, it leads to the same place. It's more credibility and more power behind the facts of what Bitcoin represents. Bitcoin never gets affected. Bitcoin gets attacked all the time and has been since its birth. Attack. Just Bitcoin thrives off being attacked. Bitcoin will never budge. Bitcoin does what it does. It's all the things around it that can cause you to have this sense of unbalance. Okay? But that tells you all you need to know. Just that one sentence. No one's pricing that in, by the way. That's not been priced in. The fact that JP Morgan did that last week. So it's a $5 to $10 billion position, and it launches on December the 15th. So this week we have the Fed and the rolling out of currency printing. Next week we have companies like JP Morgan putting up to $10 billion onto the system. You see where this takes you? All right. So these are all the things you need to watch. And it keeps you saying, frankly, without being destined to fortune, without being biased. I keep having to remind myself of that as much as anybody else. We're not here to say everything's all right, everything's all right. We're here to say this is a logical sequence. Tether is now the largest independent gold holder globally. Now, this is another maneuver that took a lot of FUD. Even from people like Arthur Hayes. Yeah, should know better. Surpassed only by central banks now. Yeah, and Tether is actually the largest allocator of funds to the Cayman Islands as well, outside countries and obviously major institutions. So they are absolutely massive. No one's the move is to protect the underlying asset against Bitcoin drawdowns. Okay, that's the published information we have as to what Tether's motives are, and that's okay. And then you've got all this opinion. Again, it's FUD. It's FUD. Be careful you're listening to. Tether Group's assets, $215 billion. Right? The stablecoin liabilities, in other words, what they owe out in terms of the system, 184 billion. That's all you need to know. All these people saying they're going to liquidate it. It's the same with strategy. They're going to get liquidated. They're going to have to sell Bitcoin. They're going to have to do. People do not know what they're on about. Right? Be careful with them. It's the nature of it. It's the communications age. We can get information for next to nothing. We can click anything we want and get a narrative. That's the bad side of it. The good side of it is that you were able to even look at underneath the hood. And these days, if you know what you're doing, you can get very quickly under the hood by working with, let's say, credible AI and cross-reference that as well, by the way, right? There's still a lot going on in AI, but it makes it a lot quicker and slicker for us to validate and verify, which is where that information has come from. NASDAQ has filed with the SEC to raise option limits on BlackRock's Bitcoin ETF, trying to say that fast, to over 1 million contracts. That's a big deal. The maximum level allowed in the IBIT and ETF environment, in fact, the ETF environment, that's a 40 times increase. So again, BlackRock, just as with JP Morgan, they're flexing their muscles to move into these higher and higher and higher echelons. They're not doing it for the good of anybody else but themselves. Just be aware of that. But as long as you understand the ownership of the fundamental asset in self-custody is 100% protected. If you start to dabble, and we do this at DBM, we do leverage and we do go into loan platforms and we understand, you do that with a proportion of your Bitcoin, right? Try not to do it with all your Bitcoin, because ultimately these guys are going to take you to pieces, just like they've done with people ever since 1914, frankly, and probably before that. So the whole idea is just know there's two games going at the same time. The overriding macro message is they are going to bring more and more and more and more liquidity into Bitcoin. That's good for your self-custody Bitcoin. Just be careful with the other stuff, that's all. But still use it. Still use it. We're still advocates of that. But just know there's two jobs going on right now. In the UK, HMRC has published consultation its consultation outcome, I should say, regarding taxation of DeFi activities related to lending and staking. Apparently from the 1st of January in the UK, the exchanges and the wallets and everybody else will have to make reports to the HMRC about your movements. Okay, now there is ways around that, but at the end of the day, pay your taxes. Right? Learn how to mitigate, but pay your taxes. If you are paying taxes, you're doing well. Don't worry about it. Right? But I can't stress enough. Said this for years. We have tax specialists inside the DBM Academy, accountant specialists that that you can work with. Especially as you get higher up the subscription levels. And the whole idea is, again, to be ahead of this information so that you're not caught out, or worst of all, putting yourself in trouble, right? Just know the game. It's okay. It's no problem. You're running a business. You have to understand these things. Decision on Master getting into the S&P 500 expected this week. And again, rumors spinning around all over the place that it's already been decided they're not going to get in, blah, 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 blah. But let's just wait to see what happens, okay? Either way, we're expecting that this week. So let's see where we go. It's all positive either way. Even if they're a junk bond, it's still positive because you've got this type of company now available on the biggest liquidity platforms on the planet. Now, to wrap it up, geopolitics. Let's just have a quick look at this. Again, it's not just about macro. It's about how that weaves into what's going on in the political levels, right? It's interesting. As we said before, what seems to be happening as we expected is the politics is following the macro. That gives you a good insight into actually who runs the show. We already know that, right? But as this is playing out, we're able to observe it in real time, be part of the fabric of that creation, which is why we like being in the center of the money supply. And Bitcoin, particularly in self-custody, gives you an ongoing year over year over year over year ability to be ahead of both the institutional bankers and also the governments. And I'd rather be there than behind them, as we've been for most of our lives. That's the difference, yeah? That's why it takes a certain type of person to be able to live at this level. Switzerland's central bank now owns over 750,000 shares of Master. Okay, boof, out the blue, just like that. Yeah, that's all positive. Japan gears up for crypto funds. There's a lot going on in Japan with their new president. or Prime Minister, whatever they call it. And the whole idea now is to see all that shake out. It's causing trouble in the near term with bonds and what happened overnight last night. But in terms of the 6 major asset managers preparing new crypto investments for the products in country, it's positive and it's leading to the necessary regulatory changes. And everybody knows Japan needs that. If you think it's been interesting in the US and Europe, go and have a look at Japan over the past 40 years. Senator Loomis slams JP Morgan for its anti-crypto policies. Again, the politicians flexing their muscles, just trying to put out the sound bites to make them sound like they know what's going on. To be fair, Senator Loomis probably does, but at the same time, it's just crocodile tears, right? Policies like JP Morgan's undermine confidence in traditional banks and send the digital assets industry overseas. That's fair play. That is a fair comment when it comes to the US. But it's all vote language. It's all about talking to the voters. Similarly, Congressman Warren Davidson says the US can fund strategic Bitcoin reserves by accepting tax payments in Bitcoin. Okay, now that's a very interesting statement. Now, if they pull that through, which I think they probably will, then they're going to be able just to self-fund at no extra cost to the country, as they put it, the ability for people to build a SBR, which is what every country on the planet should have, as long as the proceeds come, the benefits from those SBRs go back to the people. That's the big question. Okay, just look at the UK. So we'll see. But either way, again, fundamentally, it means more and more Joe Sixpacks are getting a feel for what Bitcoin's all about. And if they've got any sense, especially if they're going to start getting these, what they call them, these stimulus checks, $2,000 a person, they'll bring that out next year as soon as they get closer to the midterms. All the Joe Sixpacks will think, oh, Trump's he's a genius, he's giving me free money, right? But those with a bit more brains will say, right, good man, I'm going to stick that into Bitcoin. They'll then follow up the SBR and they'll be better off in the future than they would have been otherwise. President Trump's crypto czar, David Sachs, says Bitcoin and crypto market structure legislation will pass by the end of the year. We'll see. We'll see. It will be nice. And then we know where we're up to. And it will give us a spurt on into 2026, which is what it's all about. Got some wind in the sails. Scott Bessent reveals President Trump is likely to name Jerome's power replacement. But by Christmas, that is looking likely. Actually, overnight, we saw the, what do they call it, the huddle or whatever on the aeroplane when he's flying back to Washington. And, you know, you can see the smile on his face when they give a couple of suggestions there. So we'll see. We'll see. All that, I mean, that'll be priced in very shortly off the back of what's going on with the quantitative easing, off the back of what's going on with the bonds from JP Morgan. This is what December is all about. So all eyes on it, and we just make sure we buy the dips. The SEC will host a meeting to discuss regulatory changes and corporate governance and the tokenization of equity securities this week. Another wind in the sails moment, so keep an eye on that. Thailand has eliminated capital gains on Bitcoin. Countries wouldn't do this unless they want capital. We know Thailand needs capital. So they're bringing in the Bitcoiners. Yeah, just like the UAE has done. Yeah, a lot of people relocate because they want the benefits. El Salvador's done the same. Puerto Rico's done the same. You know, it's an obvious way to bring in this new money and give people a reason for doing so. All right, capital gains is a big part of that, obviously. And then interestingly, just late last night on the channels, we got wind that Italy's Prime Minister Meloni pushes to take possession of the nation's $300 billion gold pile from European central control. Now, this we watch carefully, because there is absolute evidence that the overbearing nature of the centralized experiment that the European Union has tried to become and has failed, massively failed, is now being undermined from within. So it'll start with your peripheral Mediterranean countries, okay, the ones that were supposed to get most benefit but ended up being completely hollowed out by Germany and France, and then it will move out from there, right? It is what it is. It is what it is. I mean, we can have whatever opinion you want about the European initiative, and we know it's good because it stopped the Europeans fighting each other for the first time in 1,000 years. But at the end of the day, there's got to be a better way to manage it than this centralized despot. These people are out of control. So people like Prime Minister Meloni know that, And that's why she's making these moves. And it will just open up. It'll just untangle the seams at the edges of the fabric. That's all that's going to happen. And it will have consequences for what we do. So we'll keep an eye on it. Okay, so that's where we're at. I know that's a lot to take in. If you want to have this conversation day in, day out with myself and the rest of the coach team in the DBM Academy, you're more than welcome. And you get closer and closer and closer to us as human beings, the more you go up in the subscription model. If you want to get stuck into the Wealth Builder series, $25 a month with the AI, getting all the projects, getting all the videos, getting everything else, that's your on-ramp. Get involved and then work up the ranks. The most successful people, obviously, are up at the top. We'll see you over there.